This audio podcast is brought to you by ETFdigest.com. Check out Dave's new book, Create Your Own ETF Hedge Fund, a do-it-yourself ETF strategy for private wealth management. Pre-order today and receive nearly 40% off on Amazon.com. Now here's your host, Dave Fry.
Hi everybody, it's Dave. It's Friday, January 9th. I'm calling you from the beach. Be somewhere between Delray and Boca Raton, Florida. I just got in after flying all day from Quito, Ecuador. I'm here with my good pal Greg Newton, who is up in toasty, warm Connecticut. How you doing, Greg?
I'm doing great, Dave, and yes, it is toasty warm. The layers of ice, the ice storms we got this week have finally melted, and we're getting ready for a nice snowfall tomorrow. So,
well, come on down, Greg. It's just beautiful. I'm sitting here on the beach. The moon is rising. The coconut tree is there. I mean, it's just really, really nice. Well, anyway, the markets weren't very nice, and I guess obviously what we need to talk about, and the major thing we need to talk about is what I've been posting for the most part, all week. I actually had a lot of alerts last weekend that I did not take, and the reason I didn't take a lot of the alerts has to do with the McClellan oscillator, and I wrote about that on last weekend. And I put it up, and it was at a historic high, and that was really the tell, that told you that we were, you and I talked earlier about, and you were telling me, others were writing about, the market has gone up, or had gone up, on very light volume, and there was really no sellers around, and that's what really stretched McClellan to the kind of level it is, because McClellan is just really an indicator that measures the totality of advanced decline issues and volumes. So, if there's no selling going on at all, and even if volume is very light, the McClellan can go to a, pretty high level if it's just a light volume buying. So that was the big tell. And the other thing I think that was interesting that I noticed this week that I also posted was the 50-day moving average that everybody gets excited about, and all the technical analysts, a lot of technical analysts, not me anyway, but a lot of technical analysts jump right in when there's a breach of the 50-day moving average. But as I posted the other day, I think yesterday, we've had two failures recent of just that kind of thing, where we've reached above the 50-day moving average, money came in and went right back out. And that's what we saw this week. Anyway, any thoughts on that, Greg?
No, it's obviously, we got this McClellan stuff you've been posting, and you post it just about all the time, but, the emphasis, it was very clearly everything was very overbought. Volume is very thin. It's quite obvious that to the extent that we're now at the first full week of the year, we've had 6 trading days, and, this week we got a couple of pretty serious slappages. What was interesting this morning was we got that lousy unemployment report, and we did bounce up a little bit off the open, because I think some people decided to say that, as they've said with quite a few things, like the retail reports yesterday, that they were bad, but they weren't as bad as they could have been, so let's all go nuts and buy something for a while. But that idea got wrangled at birth shortly after the open this morning, and we were pretty flat most of the day until around there was some news broke at around 3 o'clock, particularly concerning Mr. Rubin and the fact that Citigroup and Morgan Stanley might be discussing a merger of their brokerage operations, and that was the impetus for everyone to decide, well, for the last few weeks they've been taking stuff home on Friday afternoon, and this week they decided they weren't taking anything home this weekend, and down it went. And I think the Dow closed off 140 some, but it was down as much as 170 or 180 right before that close. It was a sloppy week. We were down between 4.5% and 5% on most of the major indexes. The Nasdaq didn't do quite that badly, but we have come back still 20% or so from the November bottoms. So it was probably about time for, if nothing else, to take a breather.
Yeah. Well, I was pretty amazed by the retail sales report and the response to it, particularly by Walmart. And Walmart they warned and reported worse than expected numbers, and they still closed XLY up on the day, yesterday that that happened. I was just amazed when I saw that. I thought it was stunning.
I think that the other thing that's important out of some of these pre-announcements, Alcoa earlier this week was another one. You know, there goes another 13,000 odd jobs over the course of the year, sort of thing. You know, what I think the market started looking at this week to a certain extent that it was looking past since November is that the commentary, the outlook from all these people, and especially Walmart, you know, by comparison with everybody expected that to be a winner because of everybody downshifting. You know, the commentary and the outlook from these guys is absolutely abysmal.
Yeah, well, and of course, you know, when Obama was elected, the day after the election, the market went down quite a bit, right? And then he's been making speeches, and it may very well be that the market goes down again as soon as he raises his right hand. You know, it's just the reaction, because I think people have been, you know, the spin has been very positive that, you know, the way out of all this is to spend a lot of money, and that's what he intends on doing. And that may work, you know, but, you know, the market seems to be, you know, unsure of it, you know, so that's pretty much where we're at. I don't know what's going to happen here going forward, folks. I think we have, you know, we had that DeMark 9 some months ago. The biggest worry that I have as a technician is a trading range environment, and we just might be in one. You never know you're in one until it's gone, you know, and it could last for months. I don't like them because, you know, we get into situations where we get, you know, into positions and we get stopped out and the market just flops around. And I think we're in a stage where the market is flopping around, and that's why we have big cash positions. And that is why last weekend, when I had all these action alerts, you know, for even partial positions, I canceled 2/3 of them when I finally got to the McClellan and saw where it was, and I just thought it was very imprudent to go forward with those positions, and felt rather stupid the first day or two on Monday and Tuesday, but that was it. And so reality bites is the image I posted, and that seems to be the way it worked out. Gold held up reasonably well, and I thought, you know, treasuries are just kind of flopping around at very high levels. We've had some auctions that people claim are well received. The Chinese are making notes. Sounds that they're not going to buy any more treasuries, as if that's just not seeing a lot.
Yeah,